Journalize the following transactions. Now the first transaction is received 24,500 from Neeraj and discount received rupees 500. Now students, there are three accounts involved in this: Neeraj, cash and discount received. Neeraj, since Neeraj is getting payment from us, that means we had to pay him something. So he was under the category of liabilities. Cash is an asset and discount received is our income, or under the categories of revenue. Now students, applying the rules, liabilities. If the liabilities are increasing, they should be credited, and if they are decreasing, they should be debited. Now in this case, the payment is being made to Neeraj. That means liabilities are decreasing. So hence debit. Cash is an asset. For asset, if the assets are decreasing, they should be credited. Since we are paying cash, so cash is decreasing. Coming to revenue, revenue we are receiving something. Since it is increasing, it becomes our income, it should be credited. So now students, the entry would appear as Neeraj account, Neeraj debited to cash to discount received. Cash paid was 24,500 and discount received was 500. So in total, Neeraj account would be debited by 25,000. Again, make sure that in such entries, debit and credit, both aspects are equal. Narration being payment made to Neeraj and discount received. There is no date, so we will mention serial number here. Now students, coming to the second transaction. The second transaction is withdrawn by owner cash worth rupees 5,000. Now since owner is withdrawing cash, so one account is cash and the second account is drawings. Any amount withdrawn by owner is categorized as drawings. Now students, under classification, cash is an asset and drawings will come under the classification of capital. Applying rules, since cash is decreasing, so any decrease in asset should be credited and correspondingly this account would be debited. So entry would appear as drawings debited to cash account, being amount withdrawn, and it is 5,000. Now students, since for capital the rule is if the capital increase it should be credited, otherwise it should be debited. So in this case, since owner is withdrawing, his liability is reduced to that extent. So that means the liability is decreasing, hence debited. Now coming to the third transaction. Goods worth rupees 5,000 given in charity. There is a charity account involved here and goods. Now students, remember, when we sell goods, it is the sales account that is involved. But when goods are given out, not considering that it is a sale. Let's take an example. You give goods in charity. It cannot be classified as sale. So then which account is involved here? It is the purchases account. In any case where goods are going out of the business and they are not being sold, so they should be taken out of purchases account. Now charity. Charity is an expense and purchases is also under the category of expenses. Now students, when the expenses increase, they should be debited. So charity should be debited and correspondingly purchases would be credited. So the entry would appear as charity account debited to purchases account, and the amount would be 5,000. This is transaction number 3. Narration would be being goods given in charity. Now students, you must always remember that in such entries, the recording is always done at cost. That is, if both the cost and the sale price are given to you, these entries would always be recorded at their cost.